Welcome back, traders. Big money is judged against one line every day and they defend it. Learn to trade with it, not into it. So what is VWAP really? It stands for the volume weighted average price, and that one word volume is the whole secret. A normal average treats every price the same. VWAP does not. It weights every price by how many shares actually traded there. So the prices where huge size changed hands count for much more than the prices where almost nothing traded. That makes VWAP the single most honest number on the chart. It is the day's true fair value, the average price the entire market actually paid. And here is why that matters so much. The giant institutions, the funds moving millions of shares, are graded against this exact line. Their bosses literally compare their fills to VWAP, so they fight to buy below it and sell above it. That turns VWAP into a magnet that real money defends. Watch how that plays out. When price is trading above the line, buyers are in control and the stock is expensive relative to fair value. When price slips below the line, sellers are in control and it is cheap. That one red above or below tells you instantly who is winning the day. And this is exactly why VWAP beats a plain moving average. A moving average just averages the closing prices, treating a sleepy low volume candle the same as a candle where $1 billion changed hands. VWAP does not. It pins itself to where the real money actually transacted, so it marks the true center of gravity for the day. That is why the line is so magnetic. It sits right where the most shares were bought and sold, and price keeps gravitating back to that center. Now here is the edge you can actually trade. Because VWAP is a fair value magnet, price does not like to stay stretched away from it. Look here. Price rips far above the line, way above fair value, getting expensive and stretched. It is like a rubber band pulled too far above VWAP. And then, snap, it gets pulled right back to the line. That is mean reversion, and it is your first VWAP trade. When price stretches far from VWAP on a calm, range-bound day, you fade the extreme and ride it back to fair value. But the version the pros really live by is even more powerful, because it turns this same line into rock-solid support you can buy against. Let me show you. This is the version professionals quietly live by, the anchored VWAP. A session VWAP resets every single day. An anchored VWAP does not. Instead, you pin it, you anchor it to one specific moment that mattered. And the most powerful place to anchor it is a major swing low, the exact bottom where a big move began. Think about what that line now measures. Anchored at the bottom, it becomes the true average price of every single buyer since the bottom was put in. It is the average cost basis of everyone who got long down there and is now in profit, riding the trend up. That is enormously powerful information. And you can anchor it to any moment that mattered. The swing low is the classic, but pros also drop it on an earnings gap, a major news day, or the exact start of a big rally. The principle never changes. You anchor at the event, and the line becomes the average price everyone has paid since that event. It gives you the cost basis of the crowd that is currently in the driver's seat. Watch what it does on a real uptrend. As price climbs, the anchored line rises underneath it, trailing along below the candles like a staircase. And here is the magic. Every time price pulls back, it falls toward that rising line, touches the line, and bounces. Why? Because at that line, the average buyer from the bottom is sitting at break even, and big money treats it as the floor. It kisses it once and holds. Then price pulls back again later, taps it, and the line holds again. That anchored VWAP has become dynamic support. Support that rises with the trend, and that hands you the cleanest trade in the game. You do not chase price up here at the highs. You wait. You let price come all the way back down to the rising line, and the dip to the line is your entry. So you step in and buy the touch, right where the institutions are defending their cost basis. And the risk is beautiful. Your stop goes just below the line. If price closes underneath the anchored VWAP, the average buyer is now underwater, the trend is broken, and you are out for a tiny loss. But when it holds, as it usually does in a strong trend, you ride it to new highs. Now let us prove this whole thing on a real chart you know. Here is that exact playbook on a real chart. This is Apple, daily, and back on March 30th, it carved out a clear swing low, the bottom of the move, right around $245. So that is where we anchor our VWAP. We pin the line to that bottom and let it run forward. Watch what the anchored line does. As Apple turns up and starts to trend, the line rises underneath the candles, climbing day after day. It is now tracking the average price of every buyer since the bottom, and it is acting as a rising floor. Price keeps respecting it, holding above it again and again. Now here is the setup, the one moment we have been waiting for. On April 7th, Apple wicks down hard. Price spikes below the rising line, looking scary, sellers slamming it. But look at where that candle closes. It closes back above the line. That long lower wick that pokes through and then reclaims is the footprint of big buyers defending their cost basis, snapping price right back above fair value. That reclaim is our green light. So now we build the trade. We buy the reclaim, stepping in right at the line near $253, where the institutions just showed their hand. Our stop goes just below the wick, down near 244, because if price closes back under that low, the whole idea is wrong and we are out cheap, and our target sits up at the prior high near $280. And notice the geometry of the trade. We are risking only a few dollars down to the stop to make almost $30 up to the target. That is nearly 3 times our risk before we even click buy, and the position size falls right out of that. With a stop $9 below your entry and a rule that you never risk more than 1% of your account on a single trade, the math tells you exactly how many shares to buy. You are never guessing your size, the distance of the line decides it for you. That is the quiet beauty of trading against the VWAP. Your entry, your stop, and your size all come from one line. Now we simply let it work. Apple bounces off the line, climbs steadily, and a few weeks later it tags our target near 280, and we are out with a clean win of almost 3R. And look at the right edge, the line just kept rising, price kept holding above it, all the way up past $300. One anchor, one touch, one clean trade. That is the anchored VWAP used the right way. Now let me show you why this one line is worth real money, with 2 real traders taking real trades on this exact Apple chart. Both start with $10,000. First up is Mia, and Mia trades with the line. Watch what she does. Every time Apple dips back down and touches the rising anchored VWAP, Mia buys it. Here is her first buy, right on the line where the big money is defending, with her stop just below the line, so the risk is tiny. Then comes the big one. On that deep wick test, the reclaim we just walked through, Mia buys the reclaim and rides it all the way up to the target near $280, a winner worth almost 3 times her risk. And when price pulls back to the line again, she simply buys the next touch, same line, same plan. Now look at her account. Trade by trade it climbs from $10,000 up to about $11,800, up 18%, just from buying the dip to one rising line. That is exactly what trading with the institutions looks like. Now meet Leo, trading the very same Apple chart. Leo looks at this strong stock holding way above its rising VWAP and decides it is simply too expensive, so he shorts it. He is betting against the line. Here is his first short, up near $280, right where Mia was happily taking profit. But the stock is in a powerful uptrend above the VWAP, so instead of dropping, it keeps grinding higher. Leo gets squeezed and he is stopped out for a loss. Now convinced the top must be in, he shorts again, even higher. And Apple just keeps climbing, all the way toward $307. He is stopped out again. Watch his account go the other way, from $10,000 down to about $8,600, down 14% for one single reason. He kept fighting the line the big institutions were defending. So here is the whole story on one chart. Same Apple, same VWAP, the same $10,000 to start, and 2 completely opposite decisions. Maya traded with the line. She bought every dip to the rising VWAP and finished up around $11,800. Leo fought the line. He shorted the strength and bled down to about $8,600. That gap is the entire lesson. The anchored VWAP shows you the side the smart money is on, and your only job is to stand on it with them, never against them. Here is your whole VWAP playbook on one card. Rid the line, fade the stretch on calm days, anchor at the low, buy the dip to the rising line, and never short a strong stock above it. So that is VWAP. The one line big money is measured against and fights to defend. On a calm day, it is a fair value magnet you can fade back to. But the real edge is the anchored version. Pin it to a major swing low, and it becomes a rising floor of institutional support that you buy every single dip into, with your stop tucked just below the line. So on your very next chart, do this: drop an anchored VWAP on the last big bottom and ask one question: is price holding above the line or below it? If it is above and pulling back to the line, you are looking for buys with the smart money. If it is below, you stand aside. That one habit puts you on the same side as the institutions instead of getting run over by them. And remember the 2 modes. On a quiet, choppy, range-bound day, lean on the session VWAP and fade the stretches back to fair value. When a real trend is running, switch to the anchored version and buy every pullback into the rising line. Same tool, 2 gears, and you pick the gear that matches the day in front of you. If this finally made VWAP click, subscribe, because we build one new trading skill from the ground up every single week. See you in the next one.